Japan's economy has long been embattled with stagnant growth and persistent deflation. Today, however, we have seen several news articles about how Japan is slowly reawakening. There are news showcasing how Japan's inflation is surging. There's massive stimulus packages being introduced, and structural reforms have finally set in to help the Japanese economy. But just because these news articles have been voicing for a Japanese comeback, is it really going to be true? Well, to find out, let's discuss what's happening. For much of the past 30 years, Japan's economy had been trapped in what many call the lost decades. What this simply meant was that Japan had experienced low growth, deflation, and a prolonged period of subdued consumer spending. There were a lot of measures to help fix these. For instance, the Bank of Japan, BOJ, which is Japan's central bank, has launched several rounds of quantitative easing, even introducing negative interest rates in 2016 to stimulate economic activity and try to push inflation up to a 2% target. Despite these efforts, deflation persisted for years, and corporate and household confidence remained low. Here, as you can see in the graph, the inflation rate in Japan was stuck from 1990 to 2021. There were only a select few years where inflation had risen, such as in 2008 and 2014, but it gradually came down. But if we were to extend this graph for the last 2 years, which was 2022 and 2023, then we get to see how the inflation rate, which was long gone in the country, had finally staged a return. In 2023, the inflation rate was over 3.3%, which was a rate that hadn't been seen since 1991. Moreover, if we were to graph out the inflation rate by month, so we can see the inflation rate of Japan for the year 2024 and the early months of 2025, then we get to see just how much inflation has returned in Japan. Here, you can see that for the last 2 months of the year 2024, inflation rate had staged at 2.9 and 3.6%, respectively, which is again good for the Japanese economy. But for the month of January of 2025, we get to see a very big increase in inflation of over 4%, which isn't just high, it's double than the inflation target set by the BOJ of 2%. These inflation data may indicate that Japan's economy is undergoing a significant shift after decades of stagnation. The return of inflation, which had long been absent, is signaling renewed economic activity. On top of inflation, one more promising indicator that has spun out as of late is wages. Wages haven't really been the best for Japan due to poor growth and deflationary periods. But if we were to graph out the average cash earnings in Japan, which measures the total compensation received by workers, including bonuses and overtime pay, we would see a notable trend. As you can see in the graph, for the latest month available as of the time of writing, Japan had recorded average cash earnings growth of over 4.8% year over year, which is impressive, considering that there has been consistent growth for this indicator since 2022. Just like how inflation helps boost economic activity, rising wages can serve as a crucial catalyst for Japan's long-term economic revival. Higher wages mean increased disposable income for consumers, which in turn drives domestic spending and strengthens overall demand. This is particularly important for Japan, a country where household consumption has remained sluggish for years due to a deflationary mindset. Secondly, what has also helped Japan's economy to stage a comeback can partly be because of the weak Japanese yen. The weak yen, as some of you may know, is good because it helps boost Japan's exports. When a currency falls, after all, it makes a country's goods and services cheaper for foreign buyers, increasing demand for exports. But there are downsides to this. When the yen falls, it can also increase import costs, making essential goods such as energy, raw materials, and food more expensive. Since Japan is heavily reliant on imports, particularly for energy and consumer goods, the weak yen has created inflationary pressures that contribute to rising prices. Let's depict this by showing you just how bad the yen fell in value. Here you can see that the yen had fallen significantly against the US dollar, a value that wasn't seen since the 1990s. For most Japanese, it may seem bad, right? Who wants to pay more for imported goods? Well, there are arguments as to why this is good and why this has helped the Japanese economy. The very first argument for this is because while the yen had raised the price of imported goods, it actually helped Japan's economy to move away from the deflationary cycle that plagued the country for decades. Furthermore, the weak yen had also spurred tourism. Data from the Japan Tourism Research and Consulting show that international tourist visits increased significantly in 2024, reaching and even exceeding pre-pandemic levels. The increased spending by tourists further supports domestic sectors like retail, hospitality, and transportation, adding another layer to the recovery. Secondly, if we were to compare the import and export growth of Japan, we get to see a similar trend. Their imports have risen, partly because of this depreciation in the yen, but at the same time, exports have surged significantly, helping Japan's trade balance recover. Hence, the weak yen not only boosted inflation, which is helping Japan exit this deflationary cycle, but it has also helped boost exports, a much-needed job to be done to help ease Japan's trade balance. Now, we also have to talk about mergers and acquisitions, M&A. M&A is basically the process where companies either merge together or one company acquires another to strengthen market position, increase efficiency, or expand into new sectors. For Japan, mergers and acquisitions have become a critical part of its economic comeback, as businesses seek to consolidate resources, restructure unprofitable units, and adapt to global competition. Here's a graph on the M&A activity of Japan as of late. Here you can see that in 2024, the value of M&A deals that involved a Japanese company rose 44% to more than $230 billion. And some reports suggest that for the year 2025, it will be more than $230 billion, which indicates nothing but strong momentum in corporate restructuring and investment. Finally, we also have to talk about the stimulus packages that are helping gear up Japan's economy. In November of 2024, under the Prime Minister Shigeru Ishiba, the Japanese government had introduced a massive economic stimulus package worth over 39 trillion yen, or $250 billion. The package is introducing various measures including subsidies in electricity, gas, and gasoline expenses. It would also give cash handouts to low-income households worth over 30,000 yen, and even raise the tax-free income threshold. What this all indicates is that Japan is trying to mitigate the damages of inflation. As we saw earlier, inflation, whilst it was much needed in Japan, has actually risen too much and too fast. At a rate of 4% seen in January of 2025, it was more than double the target of the BOJ. Hence, there have been growing concerns that inflation could spiral out of control, eroding consumer purchasing power and creating economic instability. Challenges like these could be the new problems that Japan would face coming into this era of inflation. Now, before we end the video, it is important to understand that there are still challenges along the way. Some of the biggest challenges that Japan still has can be traced to its enormous public debt, potential trade wars as implemented by the newly US presidential administration of Donald J. Trump, and even Japan's demographic challenges, which is arguably going to be the biggest problem the country will face in the coming decades. But if inflation were to continue as it is, it could actually help Japan ease some of its biggest problems. For instance, Japan's public debt, if we were to graph it out, is massive. In nominal terms, this is more than double than that of Japan's nominal GDP. But inflation could actually help reduce the real burden of this debt over time. When inflation rises, the value of money decreases, meaning that the real value of Japan's debt also declines relative to GDP. If nominal GDP grows due to inflation, the debt-to-GDP ratio may gradually fall, making it easier for the government to manage its fiscal obligations. The only significant challenge that is poised to bring harm to Japan's economy in the next few years could be Trump's tariffs. Trump has imposed a 25% tariff on steel and aluminum imports from Japan, effective March 12, 2025. Despite efforts by Japan's Trade Minister Yoji Muto to secure exemptions during high-level meetings with US officials, no assurances were granted. Additionally, the US has announced plans to implement a 25% tariff on imported automobiles, set to take effect on April 2, 2025. This measure is expected to significantly impact Japan's automotive industry, as the US is a major market for Japanese automakers. But anyway, do let us know what you think. Thanks for watching.